In this video, I will be explaining how I value stocks using my valuation spreadsheet on Google Sheets. If you are interested in downloading this sheet and using it for yourself, then click the link in the description. So this is your front screen. The great thing about this is that everything here is automatically populated. So that's all these key metrics, these analyst ratings, these technical stats here, and these dividend stats here. And of course these charts here as well. So if I change this to Cisco, I can see everything will automatically change. If I wanted to change the company that I'm looking at, I would simply go to the reference tab here at the bottom. And if I wanted to include another company, I would literally just put in the ticker symbol. So here I can put in Tesla, and then that will automatically populate here. Now if I go back to my original screen, I can select it from the drop down. So there's Tesla, and again everything will automatically populate. I can also just edit this cell to include the company that I want to search. So just say I wanted to search Johnson & Johnson, I would just put in J&J. So this is not from the drop down, so if I just press enter, again this will automatically populate. So looking at these metrics is good to look in the initial screening stage, but if I scroll down now, I will go to the valuation section. So all of these valuations are populated from these different tabs, and I will go over each tab individually. So first we have the discounted cash flow. So this is the discounted cash flow tab. At first it may look quite daunting, but all you need to do is fill in the cells that are highlighted in yellow. So first we get the free cash flow. So to get this figure, we just go to Yahoo Finance and look up the company. So in this case, I'm looking at Cisco. So if I go onto Yahoo Finance for Cisco and I go to their cash flow, so I would go here into financials. Once in the financials tab, I will then go to cash flow here. So if I scroll down, I can see the free cash flow for 2019, 14,922. So if I go back to my spreadsheet, I will input this figure here for 2019, and then I would do the same for 2020, 21 and 22. So on Yahoo Finance, they only go back 4 years, but there are other websites where you can go back further. So if you did want to go back further, you could fill in these cells here as well. So once these are inputted, the cell below here shows the growth from the previous year. And then this calculates the average growth rate over the past few years in terms of free cash flow. And then once that's calculated, we can put in our projected figures here. So this is entirely up to you, and it is a projection of their free cash flow for the next 5 years. So in this case, I've used a figure of minus 5%. If I wanted to change that, I can just go here and put minus 4% if I wanted. And then that will amend these figures here. So you don't need to edit anything here. So if I go back to my original projection, I have minus 5%. If I scroll here, all we need to fill in here now is the cash and cash equivalents. So we can get this from the company balance sheet. So if we go again onto Yahoo Finance, we can go onto the balance sheet here, and you can find it under total assets, under current assets, the cash and cash equivalents. So I would put in this figure here because this is the latest figure. So that would be 19,267. So you can see here I've inputted that figure here. Next I will include the total debt of the company. So again I get this from Yahoo Finance. So if I go here and scroll down, I can see the total debt over here of 9,515. So this is the figure that I will input. So as you can see, I've put that there. So the last thing I need to populate is the shares outstanding. So again, this is taken from Yahoo Finance. So if I go onto Yahoo Finance and go onto the statistics section here and scroll down, I can see the shares outstanding. So in this case it's 4.11 billion, so that would be 4,110. so that's the figure that I have used here. So that's pretty much all the numbers that we need to populate in this tab, because as I said, it is just the cells that are highlighted in yellow. So with all of these figures put in, I now come to a discounted cash flow figure of 57.83, and that is the figure that is here in the original tab, 57.83. So now that we have the discounted cash flow, the next step would be to get the figure for the Benjamin Graham model. So if I go back here to the second tab, I can see the Benjamin Graham model. So I've put in a note here, so this means that you can amend this to 8.5 and you can amend this to 2, because there are two separate Benjamin Graham models. But I will use the one that is most conservative, which is the one that is 7 and 1 in these two different sections here. So the only thing we need to change is the ones that are highlighted in yellow, and again you can change these as well to 8.5 and 2. So for the growth rate, if I wanted to work this out, again I would go to Yahoo Finance, and now I will go to the analysis section, and if I scroll down I can see the growth estimates for the company, and the growth estimates for the next 5 years is 6.78. so this is the figure that I will input into the spreadsheet. So that would be 6.28. In this case I've used a figure of 5 because I want to be a bit more conservative. So if I do change that to 5, it will bring the value down. And for this one, for this figure here that is highlighted in yellow, this is the AAA bond yield. So to get this figure, I simply do a Google search. So you can see here I've typed in AAA bond yield Y charts. So that's where I'll be getting the information from. So I will click the first link over here, and you can see here the figure is 4.69. So this is the figure that I need to input into the spreadsheet. And if you look here, you can see Cisco. So that's just an ad here, but that's a bit interesting. So that's the figure that I will be inputting here. So previously when I did this valuation it was 4.77, so that does constantly change, so you do need to always update this figure. So now I come to an intrinsic value of 31.07. If I go back to the initial screen, this has also updated because it's taking the value from this tab, so that's 31.07. So next I will look at the multiples model, so that is in this tab here. And for this, all I need to do is input the different tickers that relate to this company. So in this case, I'm looking at Cisco. So what I usually do is I look at the other companies that are in their same sort of market. If I'm unsure what companies are in their market, I will go on to Finviz. So this is assuming the company is part of the S&P 500. I would go and find Cisco. So I think it's around here somewhere here. So what I would do is find the other competitors in the same industry. So this is in the technology communications equipment section. So again, as you saw from my tab, there was MSI and HPE and Zebra, and there's a few others here at the bottom. So this automatically populates here, and then from the PE multiple we get an average PE, and then the average PE is multiplied by the earnings per share for Costco, which again is automatically populated. So I come to a stock price of 78.34. So if I go back to my original screen, I can see that that's also been included here. And then finally we've got the dividend discount model. So again, I will go into this tab here, and here again we just need to input everything that is highlighted in yellow. So to get this information, I go again onto Yahoo Finance. So here's the page. So if I scroll up, I click here on historical data, and what I want to look at is the last 5 years, and I want to look at dividends only. And if I press apply, I now get these figures here. So in this case, in 2018 I have a dividend payout of 0.33. so 2018 I would put 0.33, and then here this figure is just multiplied by 4, which would be for the whole year, and then I've got a dividend payout of 0.35, which is the figure that was used in 2019. So I would update all of this in this tab here and populate each of the years. So this growth rate is automatically calculated, and that gives me the average growth rate over here, which is 3.6. and then in this case I've used a weighted average cost of capital, so this should actually be in yellow as well, because this is something that we should amend based on the company. So in this case I did a Google search for the weighted average cost of capital for Cisco, and that was 7. So with all these assumptions I come to an intrinsic value of 46.31. so now if I go back to my original tab, I can see that this figure is also input here. So now on the next line we can see the intrinsic value. So this is basically an average of the top 4 valuations that we just used. And then in this tab we've got the current price, so that's basically the live price on the market. And to get your buy price here with what you should pay for the company, you can add a margin of safety. So if I added no margin of safety, then the buy price would be the intrinsic value of the company, but I am adding a margin of safety of 10%, and then that gives me a buy with a potential upside of 3.43%. So if I change this to a 15% margin of safety, if I wanted that extra bit of security, it now comes to a sell and a downside of 1.57%. So I can play around with this figure depending on how comfortable I feel my assumptions are. So if I put 5%, I can see it is currently a buy with a potential upside of 8.43%. One thing I need you to know about these valuations is that they are just numbers in a spreadsheet. It doesn't consider other metrics, and it may not always be 100% accurate. This is why being conservative and having a margin of safety is very important. I also like comparing my valuations to other sites such as Yahoo Finance or Simply Wall Street, just to see if I get similar sort of figures. Also, you will need to do your own research into the company, like looking at their earnings reports and presentations. Looking at numbers is just one aspect of the research. So if you are interested in this spreadsheet and using it for your own assumptions, then click the link in the description and you can gain access to it. So it's just basically a link to Google Sheets, and as long as you've got a Google Sheets account, you can access the file.